Hello, welcome to the Paper Podcast. I'm Ryan James. Thank you for joining me today. Today's May 24, 2023. And, things that have been on my mind this week, daily, and what's going on in the banking industry. It seems like things are kind of like on a pause right now. Everybody's waiting on regulators. What are they going to do in the crisis of bank collapse? Are there going to be more banks that are closing their doors? Are they going under from, I can't say that word, contagion. Everyone wants to use that. It's going to another, like it's something out of their control that it's contagion that they can't do it. No, these bank failures were in their control. It was in the management's control all along. They were going to fail regardless. They were piss poorly managed, and they were not overseen correctly by their regulators. And you're seeing some regulators actually coming out and saying, yeah, we're at fault too. We're to blame. And so the movement of community banks, have you seen community banks go under? No, but there's a lot less community banks. When I started banking 20 years ago, there's 15,000 banks. Now we're at, under 4,500. How does that go forward? Do we need it? We see the big banks. Chase added 600,000 new accounts over the last couple months. So they're continually growing, getting a bigger piece of the pie of the banking overall deposits. You've got the Independent Community Bankers Association prompting and having a big push on community banks. My heart is 100% always with community banks. They're the lifeblood and what makes the U.S. financial system better and stronger than any other country. But, it's still out there. We're not having the right incentivizing community banks. And I see community bankers right now, you're being lazy again. You're sitting back. You got to, the scare is we got to hold on deposits. We've all increased our rates, what we should, because, the Fed fund rates is, nearly 5% right now is what we're getting at overnight funds. And, a year ago was less than 1. So our margins, we need to be increasing rates. And, but I'm noticing now the bankers are, you're not getting more efficient. You're not getting more effective. You're not looking in-house as maybe, okay, growth. We're not going to be able to grow 20% this year, 10%. Well, that's great. That's fine. You should still be able to be valuable and profitable even without growth. That is what to me is amazing on the whole idea of running a bank. There's loans that we generated years ago. There's deposits that we fixed years ago that are still churning and still producing revenue regardless of growth. But my biggest gripe with regulators and community bankers is we seem to be approving the same community bankers that started community bank for the whole intent to sell it in 5 to 10 years, to sell a couple times a book. And when I analyze the actual shareholder value of this community banks, it's not that great of shareholder value. Where the value lies is to the lenders, the CEO, the CFOs of the starting of the bank, that when that bank sells, they're typically baked in getting 3 times their salary plus stock options and everything else. So over the years of growth, and I'm seeing it still right now that state and federal regulators are allowing banks to double in size, and their margins are just complete crap, but they feel like, hey, when I hit this level of $500 million, I'm going to be profitable, or I can then sell it 2 times book. To me, that part of community banking needs to be rooted out. We need to not be putting the same type of community bankers in that position that they're just going to start a bank and sell it in 5 to 10 years. Because ultimately, that does not help the community. Because when the community is there in between that time, we're there to loan them. Okay, great. The community got favorable terms while they were growing, and then they're gone. So, we need to kind of really do away with that model and really encourage of having sustainable growth in community banking. Support community banks. We need more startup community banks. We need the regulators to actually spend time and answer questions and run through applications faster. It's not, to me, it's not rocket science to go through each one of them and seeing if they've got the right policies, procedures, they've got the right growth mindset. to not be a billion in, 3 or 4 years, that they're actually going to have ongoing sustainable growth that grows on it, and that they are truly there for the community, not just for a short time and sell out. So, that's what's been on my mind lately. Please, if you got any comments, concerns, let me know. What would you like to see topics talk about? Thanks for listening today.